So generally speaking, the mining sector would contribute between 5 and 10% of corporate income taxes. But because of this mining boom and the effect that it has had on the revenues of mining companies, it is now likely to contribute a quarter of corporate income tax.
Hello and good afternoon. My name is Soji Kenabi and this is Africa Business Radio. On February 24th, 2021, the then Finance Minister Tito Mboweni of the Republic of South Africa delivered the 2021 budget speech, and of course a couple of things were the focus of the budget speech as then. Of course, one of the focus was around how to deal with the current COVID situations and of course how that is affecting the economy of the country. Of course, a couple of other problems, which of course one of the key one was around also budget deficit and unemployment. The midterm budget speech is scheduled for the 11th of November 2021, and of course that will be delivered by the new Finance Minister, Minister Enoch, of course, Godongwana. This is his first budget speech, and there were a couple of things that I believe the business community will be looking forward to. I have with me this afternoon Sanisha. Sanisha is with Momentum. Of course, she is an economist, and she'll be talking to us today about a couple of things that her and her team has put together, and looking at 8 things to look out for in the medium-term budget, which is scheduled for 11th of November 2021 in the Republic of South Africa. Welcome to the show, Sanisha.
Thanks so much, Soji. Good to be with you again.
Nice to have you. What has been happening since the last time we spoke?
Well, it's been quite a busy time. We were scheduled to have the medium-term budget on the 4th of November, but we also had our local government elections taking place on the 1st of November, and as a result, they actually pushed out the medium-term budget by a week. So it's been quite a busy political and economic calendar in the last few weeks.
Interesting. And I believe with regards to the local government election, the news feed are still filled with a lot of stories and reports coming and through from the some of the things that happened during the local government election. Can you talk us through the key issues around the elections?
Sure, Soji. So this time around, we didn't have a lot of insight into the local government elections like we usually do. So we tend to have these by-elections which are done in the individual wards throughout the year. But because of the pandemic and the availability of people to go out and do these elections, we didn't have that much data going into the local government elections. And I think the results were quite surprising given the fall in the level of support for the ruling party, the African National Congress, or the ANC as we call it here in South Africa. That huge dip in support for the ruling party is now starting to turn heads in the analyst community, suggesting whether this is going to compromise the ANC's ability to secure a majority vote in 2024. And if that is the case, it could actually bring about a period of even greater uncertainty and even more instability, not only at a local level, but now at a national level. So what we are having at the moment, we've got 8 big metros, which account for about 40% of GDP, gross domestic product in South Africa. So these, are the economic hubs of South Africa. And if we look at the voter base here, the ANC only has outright control in 2 of these, with the Democratic Alliance, which is the biggest contender of the ANC, having control of 1 of these. And the rest of the 5 metros are now in a hung position, meaning that they will have to have a coalition government in place. I mean, if we look around the world, even we can look to the developed markets such as Germany. Wherever we've seen coalition governments playing out, there's a lot of uncertainty on economic policy. We find that decision-making takes place at a very slow pace and things don't get done. And of course, the one thing we do need in South Africa is a lot of certainty on the direction of economic reforms so that we can achieve a higher level of economic growth. So this is quite worrying for us in the analyst community.
Interesting. I will come back to that, but let's talk about the new finance minister. Obviously, during the era of Minister Tito Mboweni, the ministry usually gets a lot of attention from the media and, of course, from the news. And the new finance minister, his style seems to be different. So far, what can you say?
Also, our previous finance minister, Tito Mboweni, had a very big personality, and he was very well known to the market because of his time at the South African Reserve Bank. The analyst community, favored him quite considerably. But even if we turn to Godongwana, he's not a stranger in the analyst community. He used to host many meetings in his capacity as the head of the Economic Transformation Committee. So he's not a newcomer in that approach.
I see.
I guess what the analyst is a bit more concerned about is his stance on certain factors that are now starting to crop up in the fiscal situation.
Interesting. All right, let's get into the conversation of today. 8 different things to look out for during the medium-term budget. Can you talk us through why 8 and, of course, why not 4? Why not just 3? Can't we just streamline our focus into maybe just one thing that could change everything?
So, if we had to streamline it to just a few things that make a difference on the fiscus, I think the biggest thing right now is what is happening to the revenue line. So for many years in a row, when it was budget time, we were often surprised to the downside as economists or fixed income analysts. But going into the next budget round, we are actually expecting some upside surprise in the numbers relative to the picture that Treasury painted back in February. And this is because of main reasons. The first is that we have had a stronger bounce back in the economic recovery from the pandemic. But the second factor is that we've had this massive boom in commodity prices. And this has caused quite a big outperformance in corporate income taxes, specifically from the mining sector. So generally speaking, the mining sector would contribute between 5 and 10% of corporate income taxes. But because of this mining boom and the effect that it has had on the revenues of mining companies, it is now likely to contribute a quarter of corporate income tax.
Wow, so that's lesser than the usual.
Indeed. And of course, there's also a knock-on effect into the mining royalties, which government also includes under their revenue banner. So that means that we could get quite a healthy revenue number coming out. It's not only corporate income taxes, we've also seen personal income taxes surprising to the upside. And that may be a bit of a surprise given that employment hasn't bounced back as fast as growth has in the South African environment. But we need to remember that fewer jobs were lost at the higher income earning end of the spectrum. And these are really, the contributors to the major tax avenues on the personal income tax front.
Okay, so let's now take that and see how it plays into the point about the upside risk to the public sector wage bill, which of course has been a subject of conversation for a couple of times now. And also that plays into the budget deficit conversation and all that.
So I think, you correctly pointed out the second biggest factor here is on the expenditure side. So while I said that revenue surprised to the upside, there was actually also an upside surprise that came through on the expenditure line item. For a couple of reasons. One, the president announced a stimulus package, and that was really to support businesses and households that were being negatively affected by the pandemic. So that was about 34 billion rand. And then we had the government wage bill, which you've pointed out, which surprised to the upside. And there's an overrun of the government wage bill of around 20 billion rand. So the increment in the wage bill increase wasn't a major surprise. But what they did do is give the employees a cash bonus that was quite generous. And that's really contributing to that additional 20 billion that wasn't budgeted for.
Okay.
Now, the finance minister has said that there is no extra money for the government wage bill. So that means that in the individual department, you've paid out higher salaries. It means that you have to reprioritize from other areas in your budget, whether it is the entertainment portion of your budget, whether it's for goods or services that you're using, whether it's for office space, for example. But because we've seen so much scaling back on other areas of the budget in the past, we are quite concerned that in certain areas such as health or education, that we are going to start to compromise on service delivery in lieu of the wage bill. And this is a really big concern. Now, traditionally in South Africa, we've often done 3-year wage negotiations because we learned our lesson in the past. Prior to the global financial crisis, we had a huge strike in the public sector, and going forward, they suggested we have a 3-year wage deal. So it gives us a little bit more certainty in terms of the medium-term outlook on expenditure. This time around, however, because the unions and, the finance ministry and the departments were at loggerheads with one another, they only managed to cobble together a 1-year wage deal, which means that by the time we get to the end of March of 2022, we would need another wage agreement in place. And if it's not going to be a 3-year wage deal, it means that uncertainty then perpetuates throughout the medium-term budget. And if we don't get a wage deal by then, it means that the cash bonus will continue into next year, which means that there'll be further upside risk to the wage bill. And the other issue on the expenditure side, which we can maybe go into a bit more detail on, if you wish, is the social grant part of it. And we have had a 350 Rand social relief of distress grant that was doled out to those that were not on any form of social grant and were not employed in South Africa, just to buffer the effects of the pandemic. This is also expected to roll out by the end of March. But because we haven't seen employment recovering to pre-pandemic levels, there is a big push from civil society to continue some form of social grant. And of course, this has not yet been budgeted for and again poses a risk to the expenditure line items.
I mean, so the social grant is a major part of what the grassroots has been holding on to. Even sometimes the workers' union, when it comes to how a common man is being affected by economic situation in the country. And with the current, what is happening with the pandemic and the current level of unemployment, I feel the social grant conversation would have to be extended. What do you think, apart from the consensus from the analyst agreement, what do you think?
I think you're 100% correct, Soji. I mean, if you indulge me in a little storytelling. So there was a report by the Pietermaritzburg Economic Justice and Dignity Group. Okay. And they said that the average general worker in South Africa, which is someone who would be involved in cleaning or delivery of goods or packing of, their national minimum wage gives them per month 3,643 Rand. Now, they said out of this budget, this one person is actually supporting a household of 4.3 people on average. Wow. And out of this 3,640 odd, you have to subtract transport costs of 1,200, and then you have to take out 731 Rand for electricity. So that means that you actually only have just over 1,650 Rand for all the other expenses of the household of an average of 4.3 people.
Including food.
If that whole amount was used on food, it would mean that each family member would only get 384 Rand worth of food per month. But the national poverty line for food in South Africa is 624. So it's not quite double, but almost double that amount. So there really is, a very big social appeal to support these households that, have suffered throughout the pandemic. And I think we will see some form of support going forward because it's just very difficult to ignore the very stark reality of high levels of inequality in South Africa. If we go ahead and we extend the social relief of distress grant, which I said was about 350 Rand per person, and they've identified about 9 million people in South Africa that can qualify for that, then it would add about 30 billion Rand to our expenditure line. So that's about 0.5% of GDP. But if we had to meet the lower bound poverty line, and that is about 890, so that's higher than the food poverty line of 620 odd, then that would add about 60 billion Rand to our expenditure, which means it's about another % of GDP. Now, it doesn't look that big if you think about, 1 extra % to GDP or 0.5% extra to GDP. But we do have to look at what we are already spending on social support in South Africa. And South Africa tends to be, believe it or not, one of the biggest relative spenders spenders on social assistance. So we're already spending about 2.3% of GDP on social assistance in SA. This is much higher than what you see in countries like India or Brazil, or even China, Russia, Mexico. And that's the case that we sit with today.
Okay, so a couple of things are already happening globally. I'm moving away from that for now. The US just a couple of days ago announced that if you look at the Fed Reserve balance sheet, there seems to be a spike, and the balance sheet is already ballooned, and they said soon they will begin to ease up on the buyback of the bonds, which will mean that they will resume active control of inflation pressure and all of that. I understand that there is no problem of uncontrollable inflationary pressure in South Africa. What do you think this sort of global trend would have? What sort of impact will it have on the reality currently in South Africa?
Well, when we saw this playing out in 2013, it was a very different world. So when the Federal Reserve started to scale back on their asset purchases, it really shocked the market, and we saw quite a lot of money flowing out of emerging markets. But this time around, emerging markets are not in such a vulnerable position. So if we look at some of their metrics like foreign reserve balances, if the interest rate levels are, if we look at their levels of growth, these elements are looking much healthier than where they were back then in 2013. This time around, we've also seen some emerging markets already raising interest rates, which puts them at a much better position than what we saw previously. Now, back in 2013, in the years that led up to 2013, there was a massive inflow of bond and equity money that went into many emerging markets. And so there was a lot that was available to flow out. But if we look at this time around, and partly because of the pandemic, there was much less money that had flowed into emerging markets, which means that there is less to flow out, which could potentially mean that there's much less of an impact on emerging market currencies. And so if that impact is much smaller on emerging market currencies, the feed-through impact then on the inflation basket through imported goods is probably going to be a lot less than what we've seen before. The only thing that is, changing this picture a bit is, of course, the global energy crunch, which much of the developed and developing world is experiencing. So that is likely to come at the headline level for inflation for many economies. And as you said, in South Africa, are we suffering an inflation problem? Well, we're fortunate enough to have our inflation expectations by the market being quite firmly anchored, despite this rise in global energy prices and global food prices. And the other thing is that South Africa has also become much more dependent on our own local food market than before. So in previous years, if global food prices went up by 1%, in South Africa, our food prices would go up by 0.8%. Nowadays, because we are more dependent on our own market, particularly for things like poultry and eggs and so forth, when global food prices go up by 1%, in South Africa, they only go up by 0.5%. So that feed-through effect is a bit more limited this time around, which is benefiting us given what is happening to global food prices on the back of this rise in energy prices. The other dynamics that are different that's playing out in South Africa is that medical aid inflation, which has typically been around 9% on average in the past, way above the upper end of our target, which is 3 to 6% band. That medical aid inflation is likely to be a lot lower because of the reserves that the medical schemes have built up. And of course, inflation has been quite weak in South Africa. So with work from home trends, people don't have to live in the most populated, expensive parts of the city. And as a result, the rental prices have fallen there. We also had quite a big housing supply relative to demand in the market even before the pandemic hit. And so this has caused a compression in rental prices. Now, rental prices together with medical aid inflation is quite a big chunk of our inflation basket. Services actually make up half of South Africa's inflation basket, which is quite unique. In other emerging markets, it averages 35%. And so as a result, we are not experiencing that massive run-up in inflation as some other emerging markets are.
All right, let's talk about the global energy crunch that you had mentioned. Of course, the UN Climate Change Conference has been the talk of the town for the last couple of days now, with global leaders reaffirming their commitment, even though some of them have really not been doing as much, as they committed to do. And there's been some sort of radical step to reduce emission, especially when it comes to the energy side. So the use of coal or unclean energy sources will be quite affected if they follow through with that commitment. How do you think that will play out on the mining industry in South Africa, and of course generally on the reliance on the revenue from the mining industry, which of course the coal part of these comes to play?
Sure. So, it will all depend on how long this commodity price boom lasts, because that will impact your revenue line. In terms of the cleaner, energy cost, this is going to start affecting your expenditure line. But I think it is inevitable that we are going to face higher expenditures going forward, particularly in sectors like mining, which will have rehabilitation costs to the environment. So I think this is a reality that we are going to face going forward. And given that firms are very concerned about environmental, social, and governance factors, much more so than before, it's almost become a necessity rather than an advantage of other firms. And as a result of that, I think this is something that has to be drawn into the future projections of the profitability levels of the mining companies in South Africa.
Okay. Let's now talk about some of the structural reforms that you hope will be announced during the mid-term budget speech.
Sure. So, in South Africa, we've often said, and we've banged the table often about, the structural efforts that need to come out in order to support higher levels of economic growth. And people always ask, what is these structural reform measures? So it's really, efforts in spaces of the economy that can uplift growth. So where we've seen quite a big push is in the energy sector, particularly. And more recently, we've actually had some very positive news around the energy sector. As you were mentioning, green energy. What we've seen more recently is that the country has secured a commitment of concessional climate financing from developed countries. So this will enable South Africa to start transitioning away from, dirtier forms of energy like coal to cleaner forms of green energy. And the amount is around 130 billion. So this has been a very positive development in South Africa more recently. We've also had the renewables bid window 5 has been open. So there's 25 projects which have been announced, and that's all on renewable energy. We've lifted the cap for self-generation to 100 megawatts. Now, this was a huge stumbling block in the past because it meant that companies in the mining sector in particular couldn't really embark on these sorts of projects. So now with that self-generation cap being lifted, we're already starting to see some activity from some of our own companies like Sasol is an example here, where these companies have now committed to add positively to overall GDP. If we look at the logistics department, we also had an announcement here that our ports authority would be established as an independent subsidiary. And that means that we can now start to allow private sector investment, and they will then partner up with government so that we can actually scale up capacity at our ports. At the moment, our ports are amongst the most expensive in the world. And so that really deters any form of export and import activity. So if we can start to ramp up capacity and reduce those logistic costs, it can be a huge game changer, and we can actually ramp up exports and the contribution to GDP. We've also seen quite a big governance drive in South Africa, and that's really to root out corruption. So we have seen some huge strides being made in that regard. Unfortunately, we haven't seen our governance indicators on a worldwide scale reflecting this improvement, and I think it will still take some time in that regard already.
All right. Finally, Sanisha, as we begin to round up, what is the implication of all of these on the country's sovereign ratings? What is the implication?
So I think there are a couple of factors that play a role in South Africa's sovereign rating. The first, as I explained now, was the governance indicators and whether we are seeing an improvement there in terms of institutional capacity. And I think in some cases we have. We have seen better outcomes from National Treasury, from the South African Revenue Services, from the public protector roles. In some cases, there have been court cases being made, that are showing a case of democracy. So I think we are seeing some positive light in that aspect. The second thing is, of course, the medium-term outlook for growth. Now, while I'm quite optimistic that we are going to see quite a sharp rebound in economic activity in the near term, I am a bit worried about longer term growth. So I think this may still be a small negative in terms of our rating scale. And then the third factor to consider is the outlook on the fiscal dynamics. So as I said, a couple of years in a row, we kept getting negative surprises on the budget. But I think for the first time, we might actually see a positive surprise coming out in terms of the revenues surprising to the upside relative to what Treasury projected in February earlier on this year. And I think this is going to count as quite a big positive for the ratings reviews that are going to take place later in November. So for now, I think we're actually relatively safe from the three major rating agencies being Standard & Poor's, Moody's and Fitch. But going further a year from now, I think we will have this discussion again about, downside risks to our sovereign rating. Because while the near-term outlook for growth and the fiscal dynamics looks quite positive, if we don't have any support factors in place by then, the medium to longer term outlook is going to start looking a bit shaky. And as a result, I think the rating agencies may have another look at our dynamics and whether we can actually keep on our current rating or whether the fall off in dynamics suggests that we need to actually move a notch lower.
All right, fantastic. Thank you so much, Sanisha. Any final word as we conclude this session?
Well, all eyes on the budget for the 11th of November. Thanks so much, Soji, for your time.
Thank you so much. I hope you come back again after the budget speech.
Definitely. Thanks, Soji.
All right, you too. Cheers. Of course, that's about that from Sanisha. Sanisha, like I said, is with Momentum. And of course, she and her team have put together 8 things to look out for during the coming medium-term budget speech from the Republic of South Africa, scheduled for the 11th of November 2021. For us, it's goodbye for now.